Welcome to this week's Dividend Cafe, and not just the end of this week, but the end of November. And what a crazy month it has been. I honestly don't know that I can remember a month so interesting in the capital markets. We've had much better months and we've had much worse months, but never one that I can remember that had so many kind of conflicting and intriguing dramas and headline-worthy news events and implications to capital markets and in fact implications to capital markets that were manifested very differently, from stocks to bonds to commodities to different types of stocks and all of that. So we're now into the beginning of December, and we'll see what the end of 2016 brings. But let me make a couple comments on November. I mean, from a historical standpoint, even apart from the investment aspect, clearly the big story of the month was the presidential election and surprise victory of Donald Trump, and the ramifications in the investment markets being felt in two different ways. And neither one of which I would say is a mistake. Neither one would I say is irrational, but does represent a certain degree of, shall we say, need to prudently discern how things unfold in the months ahead. Number one is the idea that his corporate tax reform, his proposal to repatriate foreign profits and allow a lot of money, potentially trillions of dollars, to come back on shore, the sort of less regulatory environment, personal tax reform, these things being very potentially catalytic to growth in the U.S. markets. That's sort of one of the narratives that has taken hold basically almost by the time he had given his acceptance speech. And I think there's a lot of merit to it in theory. I think a lot of those things can happen. I think politically a good portion of them will happen. But there's some question as to exactly what it will mean for investment markets and what timing will be involved and what shape will be involved. But then you look at the other aspect, which was in the bond markets and fixed income. It was one of the worst months for the bond market in years. Interest rates moved up dramatically, and those two things both happened for kind of the same reason. On one hand, stock markets priced in catalytic growth from Trump policy proposals. On the other hand, bond markets priced in growing debt and growing inflation from Trump policy proposals. So you have a little tug of war with stocks and bonds right now. It's very healthy in capital markets, but there's a chart in our dividendcafe.com this week that shows you the spread between stocks and bonds being at extremely high levels this month. And one of the highest spreads between the performance of stocks and bonds in 30 years. And we put a chart there to that effect. But even within the stock market, it wasn't one of those months where the entire market just went up. The averages are all higher, but you had certain aspects of the market that were rather significant losers. A lot of what we call the cult stocks, the very popular brand name, kind of, for lack of a better word, trendy names that are often in technology and things like that, did quite poorly. And you had the utility sector that is treated more like a bond get pummeled. But then really big gains in the financial sector and energy sector. So it was much more selective. And we think for good reason. Defense and aerospace, by the way, another winner this month anyways. So when all is said and done, really divergent results. You could say the commodity complex got hit pretty hard. The dollar rallied. But then in the energy sector this week, oil now back to a new 52-week high. The first agreement from OPEC to cut production since 2008. The first agreement between Saudi Arabia and Russia together, a non-OPEC country, to cut production since 2001. So oil consequently moved significantly higher, rallying a lot of energy stocks. So all that to say, there is no monolithic story going on that all aspects of a given asset class are going higher or all are going lower. There's not a lot of clarity, but there are expectations being built in. There's a narrative forming. And it's one that we generally agree with and understand, but know that when everyone is on one side of a narrative and a consensus view takes hold, it often results in pain for investors. So we're going to be very careful, very discerning as to how we position things going forward. And that's not just part of our normal commitment to risk management, although that's a part of it, but it's also because this, even opportunistically, warrants that type of attention. So this is one of the more important commentaries I think I've done this year. This represents a significant opportunity for investors, but it represents a number of risks as well, and we want to handle it the right way. So that's the story in November. Belated Happy Thanksgiving, and now here we are into the holiday season, and we look forward to coming back to you next week with more comments, and certainly throughout December we'll be fully engaged and trying to process all of this the right way. But I think I've gone on long enough. So let me just say goodbye. Please do check out dividendcafe.com. Really lengthy commentary there, but very readable and some really good information this week. Good charts. Check it out. Have a wonderful weekend.